What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's traded in the U.S. stock market. So if you enjoy this video, make sure you hit the like button. Really helps the channel grow. Thanks again to all those who continue to tune in. If you haven't already, make sure you hit that subscribe button and the notification button as well. That way you are alerted to when we release new videos. We do release bonus content from time to time, so you do want to be notified when we release that content. So, the nightly and weekend videos, like tonight's video, we mostly focus on triggers and targets for trades ranging from like intraday scalps and day trades to long-term swings and leap trades. So if you want a deeper dive into exactly how we set up our charts, broadening formations, support and resistance levels, things of that nature, make sure you check out that bonus content on our YouTube page, where we have a couple of videos that dive deeper into how we set our charts up. We also provide a link to a free PDF quick reference guide to for the strat, which is the base of our trading method. So if things are moving kind of quickly for you, if you're not familiar with this strat, make sure you check out that PDF. It's a real quick reference on a few, well, the major strat reversals. There's about 6 or 7 major ones, and then it touches on broadening formations as well. So make sure you check that out if you're not familiar with it. There's also a very large strat community out there. So if you are looking for more information about the strat, there's plenty of information out there. So I do encourage you to watch the full video. We do go over triggers and targets, but we also go over, just price action on all time frames, so you can get some pretty good insight in from that. So let's go ahead and take a look at the agenda. I'll stop yapping about stuff other than the charts, and we'll go over the agenda real quick. We'll recap the price action from Friday, January 9th. Then we'll zoom out like we always do, keep the level set, and look at the week, month, quarter, and year action. Then we'll look at the market maker's expected move for the week of January 16th, and then we'll zoom back in, set the 4-hour markers, triggers, and targets for Monday, January 12th, the week of the 16th, and then we'll do a quick review of the triggers and targets for the week, month, quarter, and year. All right, so let's get into the charts here. We're starting on the 5-minute like we always do. That is how we take advantage of the proven and repeatable strategy that we use. That strategy is to look for the opening print and basically watch price action from there. Once price is open for the day, if we get a higher low at or above opening print, you want to look to get into calls, targeting overnight high and previous high a day as your targets. Whichever one comes first is the first target. Whichever one comes second is the second target. So the same is reversed to the downside. If we open and price action pushes down and we get a lower high at or below opening print, we want to look to get into puts and targeting overnight low and previous low a day. So we have a pretty good example of that today, where you not only could have got an early scalp in, but it was an early entry into a longer trend or a trending day, right? It wasn't a day where we had a bunch of up and down action. It just went in one direction for the whole day. A little bit faster at the beginning of the day than the second part of the day, but all in all, it was just from the bottom left to the upper right when we look at it here. So looking at the 5-minute. Opening print is this price level in peach right here, 50.92, and you can see we opened, we pushed up, we rejected off of basically market maker's expected move high for the week and for the day. If you're not familiar with that level, pay attention in this video. We will go over that a little bit later, but basically got a rejection off of that. Basically lined up with previous high a day and overnight high as well, and then pulled back, and we got that higher low basically at opening print. So we went ahead and entered calls at the once this candle went above the high of this 2 down, locking that 2 down as a higher low, and basically just rode it the whole day. We did scale out of 50% of our position at this 123.6 fib of that holiday bull flag. If you're familiar with this channel, then you know what that is. I'll go over that here in a minute. But we did scale out of that position. If you're also familiar with this channel, you know that we don't trade too heavily on Friday. We like to just give our attention to some other things, right? We put in plenty of work during the week and generally reap the benefits of that during the week. So it's nice to take Friday off, put our focus into some other things and get prepared to, especially for the weekend with things for the family and whatnot. So we went ahead and scaled out of 50% of our position at that 123.6 fib once we started getting some of this corrective activity. We were actually on the 1 minute because we did push up so much overnight, and then kind of we didn't go straight up from open, but we went up pretty quickly from open. So we were kind of anticipating a little bit of a pullback at that point. So we went ahead and on the 1 minute, once we went 2 down, we went ahead and took profit on 50% of our position. It wasn't a whole lot of profit at that point in terms of percentage moved, but we did have multiple contracts. So we unloaded 50% of those and then just rode the rest up the rest of the day, unloaded 50% of the remaining contracts that we had at the 54.46 level, which is the 138.2 fib extension. That left us with a quarter of the overall position left. We went ahead and held on to it even as it slumped into the afternoon. They didn't expire today, so we'll go ahead and see what happens with those over the weekend. And yeah, we've had a good week all week, so we figured it was kind of worth the risk to reward. We are coming up against a daily broadening formation, but if we go, a lot of times if we close just below a broadening formation during the day, to get above that, a lot of times, or more often than not really, we gap up above that broadening formation. So we're just kind of playing that. If we gap up, then we'll continue to ride it. If not, then we'll probably exit early Monday morning, and just especially if we're still somewhere around this level where we're still in profit, even a break even, we'll go ahead and get out of that contract. And then, if you know us, we don't like to be in contracts that expire the same day. Just gives us a little bit more freedom with our plays, especially because SOXL is not the only thing that we're trading. But anyway, that's enough about today's price action on the small time frames. If we look at the 1 hour, there we go, because we had turned in, let's get a better chart, there we go, because we had put in this downtrend on the 1 hour with the high, lower, lower low. We did anticipate some downside action, and there was plenty of room for downside for a further pullback where we would still set a higher low on like the 4 hour and day time frame. So we kind of anticipated a possible push to the downside today, but we were pleasantly surprised with the overnight price action, and ended up today going above this this lower high that we had previously. What was this, on Wednesday? Yeah, Wednesday. And so we've at the very least neutralized this downtrend. We're not necessarily in an uptrend yet because we don't know if this 2 down at the end of the day is going to be put in as a higher low. Sorry, I'm trying to make this chart bigger. I sometimes forget. We have had requests recently of people asking for the chart to be bigger so they can see it on like their phone and things of that nature. But you can see here on the 1 hour, we had this downtrend with the lower high, lower low that got started. But again, we went above this lower high, so we've at the very least neutralized it. And frankly, we've gone above the higher high. So it does appear as though we could be starting a new uptrend. I'm going to go ahead and zoom back out a little bit again just so we can make sure we have perspective. I don't like to be too zoomed in. What was I going to say? Oh, so, this is the last hour of Friday's price action going to be the higher low, or are we going to push down a little bit more? We've got the fib that we usually have for the previous week, right? The high, the 50% level, and the low. So a test of the 50% level is perfectly reasonable. If you follow this channel, then you know that that's a lot of times what we expect, so that we can see what the reaction will be off of that level. If we get a good bounce, then the rest of the week tends to go positively. If we come down and we're hanging along, the week tends to kind of go sideways, going above and below the midline. But if we go straight through it, then we know that there's a high probability that we're going to test the low of the previous week's range. So we like to keep that out there if you're not familiar with this channel. But anyways, if the last hour of Friday's price action is not the lower high and we continue to push down on Monday, again, not the end of the world. We can come all the way down to this $48 level before we put in the lower low on the 1 hour. And with that, we put in the higher low on the 4 hour as well. So let's get a better chart. Here you go. On the 4 hour, you can see, here we go. Here is the bounce that we had last Friday, and was that last Friday? Yeah, last Friday. So we had the bounce last Friday, and that was the higher low at that point, or this general area, right? Here's the holiday bull flag that we were talking about. I'll just pull it up real quick. Right, here's the bottom of the flagpole. Here's the top of the flagpole. There's the bottom of the flag, and we flagged for a couple of days. So you can see how we've been playing with those fib extensions here. Rejecting off that 138.2 a couple of times now, but finding support off of that 100 to 78.6 area. At the extreme with the wick, it was a 61.8, which again shows bullishness if you get a bounce off of that level. So that's what we're looking at here. Let's remove that real quick so we can get back out of there. But yeah, because we did go 2 up on the 4 hour today, or on Friday, depending on when you're watching this. That did lock in Thursday as a higher low on the 4 hours. So we did also go higher high, which continues the uptrend, right? And on the day chart, that also locked in Thursday as a higher low on the day chart. And we've also gone higher high as well. So that continues the uptrend there as well. Okay. On the week, if we zoom out a little bit more, let's make sure we get a good chart. On the week, here's the bull flag that we were talking about from the April 7 low. If you're not familiar with this channel, let me go ahead and make it activated. Right. So here's the flagpole, and there's the flag, just similar to what we were looking at on the 4 hour. And you can see how we've gone up to some of these fib extensions, and initially rejected it off of that 138.2, had to test it a couple times. Now we're up to that 150, 168, 1.8 level. So that does coincide with this weekly broadening formation as well. So yes, we have had a nice push again this week after last week's push, especially at the end of the week. But we are pushing into some resistance. There is a gap above that could act as a nice magnet to get us through that weekly broadening formation, but do expect a little bit of resistance at this area on the way up to that gap if we're going to go that direction. And then also if we get to that gap, we do have this monthly broadening formation coming through, this solid green line, diagonal line going from left to right, this line right here that goes through exactly at the top of the gap, just a couple of days into next week's trading. Or next week, not a couple of days into next week's trading, just a week or so into the rest of this month's trading, right? So that monthly broadening formation, if we are able to break through this weekly broadening formation, I do expect to see a lot more resistance around here, as it will be the gap close. And then we do have the 200 fib extension of that April 7th bull flag up here at 65. So 62 to 65 level, I do expect to see a lot of resistance, but also looking to around this $56 area as well, $54 to $56 area initially to see what we're going to do. We did get set up with a 3-2 up on the week, so that does set up one of my favorite reversals. A 3-2 up, 2 down. Actually, I don't want to say it sets it up. It leaves on the board a 3-2 up, 2 down. The reason why I'm not going to say it sets it up is because this 2 is not a failed 2 up, right? It would look a lot better if this was a 3 and then this was like an inverted hammer 2, especially if it was red, right? That would mean momentum was to the downside closing the week, and we could open up the next week with some carryover momentum that would push us 2 down and triggers 3-2 up, 2 down. That would take us to the bottom of this 3 that we had 2 weeks ago, or last week, depending on when you're watching this. Excuse me, that's that $42 area. But we are, again, in the face of an uptrend. We've got 46.79 that is looking like it could be our major support now. Remember, we had resistance over multiple weeks at that 46.79 area. That is 2024's 50% level. So it would be nice to get, actually come back and retest that level and make a higher low here to show it is support instead of resistance like it has been in the past, and we're not doing some type of look above and fail back into the range. If we do get that pullback again, I would be looking for a bounce off of that around that level. But if we do come through that level, we've got the gaps that remain from last week, or last Monday. And if we do pull back to close that gap, that then flips us into full time frame continuity to the downside, where the week, month, quarter, and year would be red. So The bottom of the three would probably be the least of our worries, or I don't want to say the least of our worries at that point, but it could change things if we get that type of pullback, because you can see the range back in June through September or whatever. The range was like $4 or $5. It was like 28 to 29. I'm sorry, 24 to 29. Look at this range though; it's a lot larger. So even if we're going to stay in range and we're not going to put in some type of downtrend, there's a lot of room that we can put to the downside. So don't want to see the two down next week. Would like to see either one high consolidation in the previous week's range, high in the previous week's range, or get that two up and really try and defeat this weekly broadening formation. In the month and up, it's pretty much the same thing, right? We've put in the two up on the month, which not only went above November's high to lock November in as a higher low, but it went above October's high, which then means that this month we've created a higher high. So starting an uptrend on the month chart, right? Because this is you can't consider this three back in August a higher low. I consider it a soft higher low though. So if we're looking for a concrete higher low, November would be that month, and we're coming from a lower low, so we needed that higher low, higher high to actually reverse that downtrend that we were in through the end of 24 and beginning of 25. So again, in an uptrend on the month, we have reached the strat though for the month. It was just a 2-1-2 up, and the magnitude that was the high of October. So we've reached that and gone through it. So we're not necessarily in a any type of strat reversal or continuation on the month chart. But if we look at the quarter, it gives us a little bit more. Let's get all those lines off there. There we go. Again, if you're familiar with this channel, you already know what I'm going to say. We've been beating this like a dead horse since the beginning of the quarter, fourth quarter 2025, because that's when we triggered it, right? We were in this one combo two down, combo two up, right? It triggered above this 36.15 level, and the magnitude of that move is not the high of the one, but it's the candle to the left of the one, which is all the way up here at 70.08, right? So 70.08 is the target for the quarter, or it's just the overall target, right, of that move. I don't want to say it's going to happen in a quarter, because again, it triggered back in fourth quarter 2025, and it obviously didn't reach it. So it will take some time, but we're approaching it pretty rapidly. So it could end up happening this quarter. If we do reach that, then we're looking towards all times high up at the $74 area. But again, we've got this monthly broadening formation. We'll be 200 at the 200 fib extension from the April 7th low by then. So, we've got to see where we get, what kind of momentum will continue to push us up past that, just from a technical perspective, right? And looking at the year, that quarter chart plays in, right? Just like with the year. Oops, that's a little too big, I think. There we go. We did trigger this two down, two up, right? We went two down in 2025. We've now gone two up, and that triggers the two down, two up reversal, and the high of the magnitude of that move is the high of the candle to the left of the two down, which again is 70.08. So 70.08 is that magic number that we're looking for, and especially from the year chart, if we're above last year's high, we're still in force on that reversal, so we want to continue to move up with that. So that's what we've got from a zoomed out view. Let's go ahead and take a look at the market maker's expected move for the week. To do that, let's bring up our options chain. Oops, there we go. And this is Thinkorswim. If we go to the options chain for next week, January 16th, we go over to the right, we see a number in parentheses. It's a plus or minus 5.623. And that is the market maker's expected move. They expect plus or minus $5.62 worth of movement, right? So if we go back to our, not back, but go to our notes, right? This is for Monday, January 12th. There'll be 245 trading days left in 2026 on Monday. The close price on Friday was $53.95. Oops, we got to get rid of this because we don't know what the flip will be for the week. But we know the month, the quarter, and the year turn red at 45.13. And here's that $5.62 plus or minus market makers expected to move for the week. With the close on Friday being $53.95, Adding and subtracting $5.62 from the 53.95, we get a range of 59.57 to 48.33. And if we go back to the charts and we look at, let's look at like this week's expected move. Oops, let's go back to let's just go to the 4-hour real quick. You can see the market maker's expected move is kind of where we had a little bit of resistance, right? Now we were able to break through it today and with a nice strong move. Catalyst being the final numbers for the week being released, economic numbers. So it just shows that this is not an end-all be-all level, but you do see price action, a lot of times corrective activity at those levels. 70% of the time price will stay within that market maker's expected move, and that's just because they're getting that expected move by the options market, right? The open interest. So maybe I'll do a video on how they do that, but it's pretty simple. Anyways, let's get back to the charts here. So what we did is we went ahead and on the charts we put our market maker's expected move high and low. The low would, if we stayed within market maker's expected move low, that we would stay an inside week. All right, let me actually get a better chart here. All right, this is the fib for last week, right? This is the 100%, this is the 50, and this is the 0. So market maker's expected move low would keep us within last week's price action. Market maker's expected move high would have us going 2 up on the week and actually peaking into the gap, right? So we've talked about many times on this channel how tops or bottoms of gaps, depending on which way you're approaching them, can be either rejection or bounce point. So in this case, the bottom of the gap could be a rejection point. More often than not, it's just an intraday bounce point or rejection point. So the following day, if we had some continued momentum, more than likely we would go ahead and fill that gap. But a lot of times intraday, the gap can be a rejection point. So do watch for, if we do get a push, intraday one day next week and poke into that gap, just watch for that to be a reversal point for that day initially, or at least that part of the day, right? So yeah, market maker's expected move shows us moving higher next week. So we'll see if we get that gap up over the daily broadening formation. Let's go ahead and get down to the nitty gritty and talk about the triggers and targets for Monday and the week. We've got the 5-minute chart up again, and just bringing into the picture. Oh, it's going to be harder because we had a big day. There we go. Let's get it right. This will be a little bit harder for those on phone to see, but hopefully we'll be explaining it enough verbally that you can kind of understand, right? So on the chart, we've got overnight high. This is theoretical overnight high and overnight low, right? We don't know what they'll be by the time Monday comes around. So this is just for example purposes. We've got a market maker's, the overnight high, pushing above the previous day's high overnight, and also pulling back a little bit, right? So a little bit of a range. And let's get the right tool out here. Let's say we open somewhere in the middle of the range, somewhere, kind of close to where we closed, right up against that 54.6, that 138.2 fib extension of the holiday bull flag, as well as the 161.8 fib extension of the April 7 bull flag, right? Say we open here and we get some downward pressure, and maybe we bounce off an overnight low and push back up, but then we get some type of lower high at or below the opening print. We want to look to get into puts, targeting overnight low and previous low a day. Now you want to keep in mind there are plenty of points of support intraday on the way down. The 123.6 fib extension of the holiday bull flag, we had a little bit of a corrective activity around there on Friday, but ultimately made the higher low there and kept going. So you could get that sort of action here where you get some corrective activity and then you get some type of lower high below it and then continue to push down. But if you do get that, you still have this 138.2 fib extension of the April 7 bull flag, last week's 50% level, the 100% fib extension of the holiday bull flag, and last year's high, right? So got a lot of points of support intraday on there right now. Ultimately, by the end of the day, if we get there, that's one thing. But these are all possible points, that we could bounce, because again, we have neutralized the downtrend on the 1 hour, and we are in an uptrend on the 4 hour in the day. So, if we do get some type of pullback on the 15, even 1 hour, to make like an equal low, or we can even still make a higher low in the 1 hour. But we could get a bounce at one of these levels and then push back up to, opening print. And then we can see from there if we're going to go green on the day. But that's how it looks, right? Downside obviously has a lot more magnitude. If we open and push up, then we pull back a little bit and get a higher low at or above opening print. Again, we want to get into calls, but previous high of day is right there. Theoretical overnight high is right there as well. So obviously not as much magnitude. And if we are opening below this daily broadening formation, this orange diagonal line, instead of gapping up over it, then I could definitely see the daily broadening formation being a level of resistance. We have this 15-minute broadening formation coming through here as well, this light blue line, right? So if we don't gap above the daily broadening formation, 15-minute broadening formation in the morning on Monday, look for a little bit of downward pressure, or at least sideways action. Again, we don't usually get into predictions, but that's just how it would appear from the charts right here, right? Again, we'll have triggers and targets set on both sides of the equation. So if we don't pull back and we push up, we've got triggers for that. But that's how it would have kind of appeared today, at the close Friday, is if we're not going to gap up over that daily broadening formation, we might get a little bit of sideways action or a little bit of pullback. All right. Going to the 4 hours so that we can look at things from a more of a day trade, full day trade perspective, maybe overnight swing perspective, right? We did get the, oops, come on now, Thinkorswim. Try and make this bigger for people. There we go. We did get this one 2 down, one combo 2 down, where this 2 and this 1 are combo 2 down, 2 up, right? That triggered for us. So we got the 1, 2 down, 2 up. The magnitude of that move, again, not being the high of the 1, but the candle to the left of the 1. So we obviously reached that magnitude, which then put us in a combo 2 down, combo 2 up to the upside with the magnitude of Tuesday's high. And we obviously reached that and made a higher high. So everything looking good from that perspective. Now, if we do get some turnaround on Monday morning, right, if the first 4 hour candle of Monday goes to the downside and we go 2 down, that triggers this 2 up, 2 down. Magnitude in that move obviously being the low of the candle to the left of the 2 up. So that magnitude would bring us all the way back down to test, poking through last week's 50% level, but testing last quarter and last month's high, right? Last quarter's high is this yellow level. Last month's high is this, green level. So yeah, we do have some ways that we can fall. Again, this gap, we did leave a little bit of a gap here. So if we do fill it, that would give us a lower low. Now that's coming from a higher high, so it's not going to be starting a downtrend. It would just be creating a broadening formation. So that would just, signal a little bit more sideways action, people digesting the move that we made. So again, it wouldn't be the worst thing in the world. To the upside, again, we've got to get over that daily broadening formation, but we've got the 161.8 fib extension of that April 7 bull flag up here at 56.92. And again, that the gap up here at 60 with the market makers expected move high up here at 59.57. On the day chart, again, we put in that higher low on the day, so it would just be a continuation if we continue to the upside. Again, bringing in that 161.8 fib extension from the April 7 bull flag. And if we go to the downside, again, would be going below last week's low, but again, not the end of the world. It would fill a gap, take that one off the board. Still be one down here that could act as a magnet, but should see pretty good support at some of these levels on the way down, especially that 46.79. That's where I'd be looking for the most support, because that was such major resistance in the past. You can see it here. If we just look to the left, all the resistance that it created, right? So I kind of would like a pullback to that 46.79 and get a bounce off of that level. I would feel I would feel good about that, right? Again, from the day perspective, it's coming from a higher high, so we're not setting a downtrend or starting a downtrend. We're just creating a broadening formation, just like we did here, right? On the holiday bull flag, we pushed up and then we consolidated, made a higher high, lower low, just made a broadening formation and then broke out of it. So not the end of the world if we get some downside action. It would just be an expansion of the broadening formation that we're in. So let's go to actually let's look at the week real quick, since there will be new triggers and targets for the week. Let's get a clean chart up here. Broadening formations on there for us. And again, we talked about how we got the 3-2 up. So, going 2 up again, obviously the market makers expect that to happen. Poke into that gap. Maybe we can get that gap fill and then test that monthly broadening formation. And again, to the downside, if we do get downside action, that's a 3-2 up, 2 down. That would bring us back down to last month's 50% level. And again, it's wouldn't be the end of the world from the weekly perspective. Yeah, that is a higher low, but I consider it a soft higher low. I consider this the more solid higher low. So I feel like we could get down to 35.70 before we are putting in that lower low. And again, we're coming from a higher high, so all it's doing is making a broadening formation. So you can see that I can't really say too much bearish on any of the time frames that we're on, even those smaller ones. I said, the 15-minute, we may be pressing up against that broadening formation there in the morning on Monday, but if we gap up over it, there's nothing bearish out there for me to say, right? So just to continue along with the notes, we've gone through the charts enough. We talked about on the scalping perspective or early entry on a trending day. We're looking for higher lows at or above opening print to get into calls, and we're looking for lower highs at or below opening print to get into puts. On the 4-hour chart, we talked about if we go to the downside, that triggers a 2 up, 2 down reversal. That triggers at 53.77. The magnitude is 50.31, but that is a pretty big move in the face of an uptrend, right? We just put in the higher low on the 4-hour. So if we do pull back, I do see a bounce point around that 51.91 area. If we go to the upside, it's just a 2 up, 2 up continuation, triggering at 54.75. And I've got a target of 55.51 as my first target and 56.56 as the second target. On the day chart, if we go to the downside, that also triggers a 2 up, 2 down. That triggers at 50.31, which is the magnitude of the 4-hour move. The magnitude of this 2 up, 2 down is 48.13. But again, we're in an uptrend, so I do have a possible bounce point at 49.18. If we do get down to magnitude 48.13 and we've got continued momentum pushing to the downside, I've got extended targets of 47.70 and 46.79. And remember that 46.79 is that major support level that I'm looking for, that 50% level of 2024. To the upside on the day chart, if we go to the upside, we get a 2 up, 2 up continuation. That triggers at 54.75. What is? I think that might be 55. Oh no, I know why that was. That's a 2 up, 2 up. I don't know why I have a magnitude there. That shouldn't be there. It's just a continuation, not a reversal, right? So we have 54.75 as the trigger on the day to the upside. First target 55.51, second target 56.56. We can take a look out here, right? We could, I don't know, 59.57 is a long ways to go. $6. We went $4 today. Yeah, I don't think I want to put that on the day chart. So those are good targets for the day. On the week, again, we talked about if we go to the downside, we've got quite a ways to go. Well, not quite a ways to go. We got a ways to go. We would have to get down to 48.13 to trigger that, but it would trigger the 3 2 up, 2 down, triggering at 48.13 with the magnitude all the way down at 42.01. Again, we are in an uptrend, so I did put possible bounce points here. If we go to the upside, we would get a 2 up, 2 up continuation, triggering at 54.76, and we've got our extended targets listed for you here. We talked about on the month, we triggered that 2-1, 2 up at 50.09. 50.19 was the magnitude, so we've blown through that, and we've blown through 3 of our extended targets. So we've got that 56.92 and 59.30 as our remaining extended targets for the month. If we happen to get there, it's only $6 away. SOXL can do that in a day or two. If we actually, on Monday, we'll go ahead and put some extended targets out there in Monday's video. But for now, this is what we're looking for. On the quarter, again, we triggered that 1 combo 2 down, combo 2 up. It triggered again at 50.76, but the initial trigger was 36.15. We have got through a couple of our extended targets on the way up to magnitude here, but again, because that move is so large, we do have our intermediate targets out there for you. And on the year, we talked about how we triggered the 2 down, 2 up at 50.76, and the magnitude of that move is also 70.08. So just want to remain above that 50.76 level, right? That's what we have for you here today. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Hope everybody enjoyed today's video. If you did, go ahead and give it a thumbs up. It's free to give a thumbs up. This video is free, so we hope that could be a fair exchange. But anyway, yeah, give it a thumbs up if you enjoyed the video. You know, it helps us understand the the analytics of how we're helping people, where we're helping people, things of that nature. Also, leave us a comment if you have any questions, comments, anything like that. We're always open to constructive criticism. If you're familiar with this channel, if you tuned in enough, you know that we've made a few changes based off of viewers' requests. So, don't be afraid to ask, and we'll be happy to respond. But we'll go ahead and wrap it up here at this point. Just kind of like we always do. If you're watching this Friday night or Saturday or Sunday, hope you are having a good weekend and getting some good rest. If you're watching this Monday morning or Monday during the day, we hope you got some good rest over the weekend and woke up refreshed this morning. And we just look forward to getting out there and trading with you.